has broken down. Boy, this precious metal has melted down almost as much as silver. Gold down 6% on Monday, silver down 10%. Jim, you know, we just talked about gold not long ago because we hadn't talked about it in a while. You love the gold coin. You did not like these gold ETFs. They are getting hammered.
I want to distinguish between the way I look at gold and trading of gold. You know, if gold had become too much of your portfolio because it increased, you have to trim it back. But as a storehouse of wealth, gold has value. Now, I'm not saying trade gold. I've always said you should have gold as an insurance the way you have insurance.
10%.
Yeah, you have it on your house. I mean, it's not always going to work. As a matter of fact, it's been in a 12-year bull market, and that's clearly over. Now it's in a bear market. I think when I look at Jim Cramer on Twitter, I mean, I can see people were saying, listen, I was trying to make a lot of money off gold. I've always regarded gold as an alternative currency in a world where they're debasing currencies. There are other people who view gold as a great speculative buy, and they obviously didn't have enough money down, and they're being blown out. When you have a margin call, it never stops at where it should. It always goes right through it. We saw that in 2008. There's obviously a lot of hedge funds that are levered or thought that gold was going to bounce, and they are now all have to be blown out. I mean, every one of them has to be blown. Anybody who borrowed money to own gold, and I think a lot of people at home would never do that, but anyone who borrowed money to own gold is being cashiered right now. And the cashiering process is very brutal, and it doesn't end in one day. It was going on Friday, it's going on today. It'll keep going on. So the idea of trying to figure out where gold bottoms is futile. Right. Because you don't know, only a margin clerk knows right now. And I think a lot of people say, well, Jim, you're just punting. I don't care.
But there's no way for people to know when you have, talk that Merrill came in and dumped $6 billion worth of gold on the market just in boom, one fell swoop. And, that's a shocking thing to a market.
And central banks might be selling. Central banks have a lot of gold. And I've liked gold since 800, but I wasn't in it for the appreciation. I've always said insurance and alternative currency. And if you decide, well, listen, Jim, you're killing me in gold. Obviously. Did you only take insurance and never own the house?
Well, and you bring up a good point because there are a lot of people that like to trade gold, and there are quite a few good technical analysts on Real Money that I was looking at just this morning to see what they were saying. Cause thought,
and what is their view?
You know what? They said, listen, if you wanted to get in, you could potentially get in here. But they also suggested to wait because it is a falling knife right now, and you want to wait and see. Is it going to stay in that 1450 range, roughly, right in there? So that's what Carolyn Borden was saying. Was watch that range.
I like her.
Yes.
I think it
watch
goes
that range, and if it stays there, but if it keeps going down,
I think 135. I was talking to my friend Matt Horween, who's our colleague. The 135 looks like where the chart could say hold. Again, margin. I worked in margin. Okay, margin is a distortion. It does not have anything to do with the fundamentals. Gold is in the hands of the margin clerk. So. You want me to opine and tell you to buy gold, then get me into the margin office because you can't. It's not owned by people who are rational right now. It's owned by people who are frantically trying to put up capital or their position will be lost by the end of the day.
All right, so listen, if you're trading gold, it might be wise to be patient right now. Otherwise, if you're keeping gold in your portfolio as insurance, it's good to have insurance and wait it out.
Exactly right.